Good morning and welcome to the session on recalibrating global demand. I'm delighted to have a tremendous panel on the stage with me who can provide a very broad range of deep perspectives on this issue of global imbalances. Global imbalances were the fundamental question troubling economists before the crisis. The measures which have been adopted to deal with the crisis in many respects could exacerbate these global imbalances, leading to structural imbalances which are even deeper than those before. And so how we get from a situation of necessary measures now, which are needed to overcome the crisis, towards a better global balance of savings and consumption and debt is a key question. We'll address this issue at many levels, at the level of the global macro, as well as at the financial system, national systems, and global, and also at the firm level. And I'm delighted to have on the stage with me, as our first panelist, Minister van Quickenborne, the Minister of Economy and Reform of Belgium. I'd like to ask the Minister, to what extent do you feel that Europe has done the necessary measures to deal with the crisis, and in particular, how is it going to get to address the global imbalances which so prevailed before the crisis?
Well, thank you for that question. I think that the stimulus packages that we have implemented in the different European countries, although they are only 3% of GDP compared with the 15% of Chinese stimulus package, it has done its work. If you look at the latest figures, you could say that we're getting out of recession, although we should be very, very prudent about it, because latest figures, for example, industrial output in Germany was a decline of July. What I was looking at is that next to the stimulus packages, of course, what we have seen is that the social system, what we call the automatic stabilizers of Europe, for example, temporary unemployment, which gives the companies the possibility to keep the workforce, although there's no work at that time. It gives some leeway to companies and to citizens to stay there. And if you combine the both, I think the system has worked. What should we do now? First of all, I think we should not withdraw from the stimulus packages at the moment, because otherwise we risk going into double-dip recession. So it's too early, and with making the budget now for next year, I think we should stay with those stimulus packages. Secondly, the question is recalibrating growth. What kind of growth should we look at? Well, I think there's a fundamental imbalance in Europe. For example, in my country, the latest 10 years, the real growth of GDP per capita after inflation was about 0.5%. If you look at what the growth of government expenditure was in those last 10 years, we talked about 1%. So the problem is that you have an imbalance in Europe with government expenditures and what the real growth of citizens is per capita. And so we should go for structural reforms in the pension schemes, for example. We have pre-pension schemes in Europe, which gives people the chance of leaving their jobs at the age of 55. I think this is over, but difficult to sell, of course, in politics. If you look at the number of public officials in European countries, especially in my country, that is a big, big problem. More than 1 million people are working for the government, So this is a problem. And third, of course, healthcare reform. We have a very good healthcare system in Europe, especially in Belgium, but the cost of it is so high, and especially with the aging of the population, that there again we need some reform. So I think that this is an important moment, because we're faced with public deficits, to do structural reforms, and that we should see in 2010 and 2011.
So structural reforms which match the intensity of the short-term remedy solutions. Ying, you are the general partner of CTC Capital, have established very successfully a number of firms in China which have been listed on NASDAQ and elsewhere, and now you're growing firms domestically in many areas. Has the response of the Chinese government allowed you to have the sort of credit you need to invest? And what would you think are the priorities in terms of recalibrating global demand from a Chinese perspective?
Thank you very much. It's a very interesting question to me, because among the entrepreneurs and many Chinese participants during those last couple of days, we were discussing that what kind of changing China going to be facing after this global demanding going down, because China's export business has been affected dramatically, has been down quite a big percentage. But at the same time, the people's savings growing up a lot in China. Recently, the governor of Chinese Central Bank, Mr. Zhou Xiaochuan, addressed that the saving rate in China is way too high. So one way is to encouraging people spending more money. The other way is to invest. But most Chinese don't know how to invest. So I would encourage government to open more ways to let the different financial institutes, including the banks or insurance companies, to put money into the certain fund and fund of fund, and then invest into the professional fund like ours to do the investment. But on top, put that aside, talking about the Chinese market, I think most people would think China is a very, very big force for exporting. But I would remind everybody here is actually, if you think about that, China probably going to be becoming the largest importer in the world, because of we only have 1.3 billion people, and we have one-child policy. But yesterday, some of the entrepreneurs are already recommending to the government should easy that up to solve certain problems, to have like two-child policies per family. Think about that. That will tremendously expand China's purchasing power a lot. My father had 14 brothers and sisters. I don't think China will go that far again, but myself is personal benefit from China's economic reform. When I founded the company, UT Starcom, it took me like 7 years to get $1 billion revenue in China. My second $1 billion only took me 1 year, from 2002 to 2003. So I would recommend colleagues here, whatever the business you are, should take the advantage of Chinese growth and easing up the investment side and the government policy to encourage people to spend more money. Thank you.
Thank you very much, Wu Ying. You've highlighted the very wide disparity between savings and consumption rates in China and those in some of the other OECD countries, not least the US, which is working hard to reach 5%, which is 1/12 of your level, I think. Ilian Mihov, you're a professor of macroeconomics sitting in the Asian region based in Singapore. Do you believe that the structural imbalances are a fundamental challenge in the medium term? Do they worry you more than they did a year ago? And how would you get from where we are now, which is a necessary increase of these imbalances, to where we need to be, if you do think this is a big issue?
I think that there are a couple of important issues in understanding imbalances. Certainly they are still worrisome, and they should be worrying anyone who cares about global stability. The first question that arises, of course, is why do we have these imbalances? And everybody knows that in the United States, US households consume too much. But then we have to ask the question, why do US households consume so much? And indeed, the data, when you look at the data, consumption relative to income or to GDP has gone up from 63% to 70% in 2005, 2007. But what is behind this increase? Surprisingly to many, it's not because Americans consume more cars, more toys from China or anything like this. Surprisingly, the biggest increase in consumption is healthcare. From 10% of consumption, healthcare has gone up to 18% of consumption. So the fundamental driver behind the increase in consumption in the United States is the increase in healthcare costs. So I think that actually addressing this will indirectly address also global imbalances in a big way. If you look at China and we start asking the question, why do Chinese save so much or consume so little? The answer is not very different because of the one-child policy and because of the social security system, because of the retirement system, people have to save more for their retirement. So if we need to rebalance the global economy, in the case of the United States, I think that one immediate thing would be to deal with the healthcare costs, and in China it will be also to provide something along these lines. There is a second point that I'll mention very quickly. There is also a very natural way for rebalancing, because as China is growing and as India is also growing, very soon they'll become a big part of global demand. They already are. They'll become even bigger. And just to give you some data that is a little bit shocking, if you believe that at some point China and India and countries like this will reach the rich countries in the world, will have the same income per capita or similar income per capita, then the global economy will look very different. The United States will be 5% of the world economy. The euro area will be less than 5% of the world economy. China will be 20%, India will be 20% of the global economy. You'll see a huge shift in terms of economic power and therefore in demand. And that is already happening.
A number of the panelists have already mentioned the need for structural reform, not least in pensions, healthcare systems, so on. Caio Koch-Weser, you are currently Deputy Vice Chairman of Deutsche Bank. You've been Minister of Economy in Germany. You've been Senior Vice President of the World Bank, indeed my boss at the World Bank in the early 90s. From these many different vantage points, and also from your involvement from the very onset of the reform process in China, where do you see the potential for big wins in achieving a recalibrating of global demand?
Well, let me first say, Ian, that for many years before the crisis, the G7, the G20, as a G7 deputy, I was involved in the drafting of these communiques, have asked for addressing global imbalances and recalibrating growth by the US getting on a fiscal consolidation path and getting savings up, Europe getting serious about structural reforms, Japan the same, and China and other emerging markets to shift more to domestic demand and slowly appreciating their currencies. Now, what I think even now, post-crisis, is pretty much known, but the how we do that, the political economy of that and the international orchestration of that is much less clear as it was before the crisis, where we didn't act on that. And in fact, that led, in part, it was one of the reasons for the big mess we got into. 3 quick points. I mean, one on the nature of the recovery. We at Deutsche Bank believe it will be a very subdued, slow, laborious process with high volatility around the trend in the coming years, leading back to growth rates in the OECD countries that are at least 1% below the potential growth of the trend of past years. The big debate will be now what is really the output gap in the new environment, which is important for Bernanke and others. To what extent can he continue to stimulate and be loose without risking inflation? So it will be like sinus curves around a subdued trend, and of course the phasing out of the stimulus at some point, the lag effect on employment that reflected in consumption will make for this high volatility. Point number 2 on the imbalances. Obviously the US cannot return medium term to be the world's importer and consumer of last resort. As Larry Summers is saying, I mean, we will have to be more of an exporting nation again. It has a lot to do, obviously, how you get savings up in the US, get back to the virtuous path of Rubin, of having public surpluses, which, needless to say, when you look at the terrifying numbers of debt GDP and fiscal deficits and project that into the future, will be a huge task. And my worry is that while household savings are up in the US now, and the current account deficit is coming down, it might not be of a lasting nature, because obviously if you have huge fiscal deficits, that translates into renewed push for higher current account deficits. To come to Europe, I mean, we finally have to get serious about some of these major structural reforms. We're talking a lot about Lisbon. There will be interested minister sees post-crisis more willingness to act, but it was not a stellar performance, frankly, in recent years. On China, obviously, the shift to domestic demand, I believe, is very much the intention now of the government. We heard the Premier last night, but it will take time. It will be years 5, 6, 7, 8 when this kicks in, the inland provinces, social security systems leading to less precautionary savings. What happens in the meantime when stimulus is phased out after year 2 or 3 and before you get to this paradigm shift? I think that's a question one has to address for China. Final point on future drivers of growth. Needless to say, I think it will be very important to find new technologies, new areas where we can give the world economy a push. In the 80s, we lifted global growth by at least 1% to Thatcher Reaganite liberalization. In the 90s, 1 billion workers, China, India joined the market, gave another boost to world growth. We were at 5–6%. Where is that growth coming from in the future? One answer, middle classes in the emerging markets, this few hundred million that will enter middle class status. But I would also point to very new areas which the Obama administration is very actively thinking about. For example, I cannot go into all of them, is climate change and energy efficiency, which should not be seen as a constraint only, but really an opportunity for new technologies. Stephen Chu thinks of things like Project Apollo now on climate change, as the way Project Apollo in the 60s led to the IT revolution. I think there are a lot of unexplored areas. And let me end by saying to the Chinese audience, for China not to see this as a constraint to address climate change only, but as the opportunity for technological leadership in the next generation, whether it's electric cars, whether it's new ecosystems, cities, and so on, is an enormous opportunity for Chinese growth, for Chinese competitiveness, and in fact, a new composition of growth. Let me end here.
Yeah. Thank you very much for that comprehensive set of pointers, and I certainly hope that the impetus for growth comes from those sorts of drivers, real innovation and development of new champions, rather than a more mundane sort of driver like increasing population. Dave Dollar, you were the World Bank representative in China till recently, worked very widely as a macroeconomist, and now are the emissary of the US Treasury for economic and financial affairs to China, an absolutely pivotal position in the relationship between the US and China. From your perspective, let me ask you both a question about the US and its relations then with China. Do you feel comfortable that the US is on track to address the imbalances that it has internally, and how do we get from the short-term increasing deficit to a long-term better position of better balance? And in the relations with China, what is the single biggest issue that's on your agenda in terms of trying to recalibrate global demand when you talk with the Chinese?
Okay, thank you, Ian. Really great pleasure to be here. In terms of your first question about the U.S. getting its house in order, I would say that I'm quietly confident. I do think the United States has some serious challenges. This crisis has revealed a lot of weaknesses in regulation. It's revealed weaknesses in low level of savings. And so I think we have to begin by recognizing that the U.S. faces some very serious challenges, and we don't want to deny that. But I think the U.S. administration and the U.S. people are really quite serious about addressing these. Household savings had basically gone down to 0 during the boom period. They've now bounced back to about 7%, which is the historical average of recent decades in the United States. I think we've got incentives in place to keep household savings at a good level and rising. And as Caio Koch-Weser said, the real concern at the moment is that we have a very large fiscal deficit, which I think all our partners support at the moment because it's necessary stimulus. But it is about 10% of the U.S. economy, our fiscal deficit now, and that is a somewhat scary number. Now, the good news is 2/3 of that is directly related to stimulus and to the crisis. So as the U.S. economy stabilizes and recovers, about 2/3 of the deficit goes away pretty automatically. But that's not sufficient. Other measures are going to be needed, and I very much agree with Professor Mihov about the importance of healthcare costs. And so the whole Obama healthcare reform agenda is quite critical for really getting the U.S. on a very healthy fiscal path over the next few years. So it makes sense for the world to look very carefully at this, but I think the U.S. is serious about a set of reforms that will bring about higher household saving and bring down the fiscal deficit and raise government saving. Now that means the U.S. can grow well again, but it's important that everyone understands that in this new pattern of growth, we expect U.S. consumption to rise less rapidly than GDP. And that's what it means to rebuild savings. And U.S. imports are not likely to grow rapidly. We don't want to see a resumption of the big U.S. trade deficit. That's not in anyone's interest. And so our partners have to understand that the U.S. will not be the same source of demand that it has been over the past decade. And everyone should view that as a good thing. But there is a risk then that there won't be enough demand in the world. And so we do feel it's important for the big surplus economies of the recent period, which would primarily be China, Japan, and Germany. We think it's very important that these economies stimulate more domestic demand and more consumption so that there's sufficient demand in the world that meets the productive capacity of the world. So we think there's a happy way out of the imbalance, but it really takes some important reforms on both sides. And I'll just briefly say for the second question about China, we have a lot of issues to discuss with China, but I actually think this is a moment where further trade liberalization in China is very much in China's interest because it will help resolve this imbalance in a way that allows China to continue to grow very well and have a healthy export sector. So there are important sectors. There's some high-tech manufacturing sectors where China would benefit from more openness. There are important service sectors like insurance markets and entertainment. So I think a lot of the agenda with China right now is talking about further trade liberalization. That's a mutual issue, but I think a lot of the restrictions that are in place in China, and that it would help China resolve its part of the global imbalances if it moved on some of this agenda, moved faster on some of this agenda.
Thanks very much, David, and thanks for the very clear and frank responses of the panel, which have really been a tremendous kickoff for this discussion. We have about half an hour. Please keep your questions short. We don't want long statements or comments. As interactive as possible, and also please just state your name. We do have translation if you'd like to use it, and who would like to go first? Direct your question either to the panel in general or to a specific person. The gentleman over there.
Joseph Casputis from Global Insight. I have a question for Mr. Dollar. With regard to the fiscal deficit being run by the U.S. federal government, the CBO has recently released a projection over the next 10 years that the deficit would be 7.1 trillion over that period. Peter Orszag at OMB projection is 9.1 trillion. With those large deficits, is the U.S. doing fiscally what it should to contribute to rebalancing global demand?
Anyone have a question which is related to this or follow-up? Go ahead, David.
Well, I think the U.S. has a very tough challenge because, in these most recent G20 meetings, all our partners are telling the United States, don't withdraw the stimulus too soon. So I think there's broad agreement that the current level of fiscal deficit is appropriate because the world needs stimulus. We were going into a very scary downward spiral, and we got coordinated stimulus. We heard about Europe. China has a fantastic stimulus program. The U.S. has had a big stimulus program. So I don't hear many voices telling us to cut the fiscal deficit tomorrow because we still have a fragile recovery. But everyone also agrees that within a few years, we have got to bring that deficit down. And as I said, some of it happens automatically, but you're right that those projections you mentioned over 10 years, those are pretty big numbers. It still brings the U.S., those numbers bring the U.S. to a level of total indebtedness relative to GDP that's not even close to where Japan is, for example, or where Italy is. So, let's put it a little bit in perspective. It's not the end of the world, but certainly the administration takes very seriously the need to try to do better than what's indicated in those projections through a variety of fiscal measures.
Caio?
Just a thought on that, or question to you. I mean, obviously, this takes time, this fiscal transition, and it should, given the present needs. But I think it's very important to anchor expectations in terms of presenting a medium-term fiscal consolidation path that addresses some of the major building blocks of such fiscal consolidation. And the real question is, of course, we see the problems now with healthcare reform, to what extent electoral calendars and political economy will enable what I'm sure Larry Summers and Tim Geithner would like to do, I know them, is to anchor indeed expectations soon in such a medium-term consolidation path. I will not ask you about the exchange rate because as a Treasury official myself in the past, I know we don't talk publicly about that, but there's obviously a dollar dimension in that too.
I think it's important to try to strike the right balance. So we're very concerned about these issues and we take all this seriously. But if you look right now, the interest rate on long-term Treasury bonds is at a very low level by historical standards. So that says the market has confidence that the United States is going to get these things under control. We don't see in the market much worry about inflation or some of the more dire scenarios. And of course, the market can be wrong, but we look very carefully at how the market is reacting. And for the moment, there's confidence that the U.S. will take the measures to get this fiscal problem under control.
Well, yep, the gentleman over here. I'm going to collect 3 questions. Gentleman over here, then the lady in the back with red.
Martin Schöller Group, Germany. I'm very worried about the banks being so strongly constrained, capital constrained, and that hits the flow of credit, the credit crunch, and the credit crunch is what takes down investment goods manufacturing. The production indexes are down 30% in Europe and in the US, maybe 25%, and it does not look like recovery. So I think that more needs to be done to enable the banks to get out of their capital constraint and to reopen the flow of credit, which is really, if it stops there, investment stop, durable stop, investment stop, clients cannot invest, investment goods are not sold, and that whole thing is a total block. I hear from German banks that they don't like the way they are getting help because it's not suitable for them, it makes common equity look bad, and so forth. So I think we are lacking interactive discussion of several groups, central banks, standards bodies, and people who are worried about how to get the economy running, because the politicians only say, please do something, but they not yet have the formulas how to allow the banks to get back into providing credit to the industry.
I'm sure the panel's got some comments on that. The lady in red at the back, yeah.
I'm from Hexun. I'm from Hexun. I'm from Hexun, a financial media in China. I have a question. Now the macro statistics of China is already published by the statistics. CPI is down by 1.2% and PPI is down by 0.6%. One increase of 0.3% over the same period. How would you comment on the performance in China? And will China or should China increase its interest rate?
The gentleman behind there.
I'm from Wang Yi Finance Media. Now, countries across the world, in order to mitigate the effects of the financial crisis, have taken some loose monetary measures and have taken some proactive fiscal policies. However, this may lead to another round of excessive liquidity and may also lead to inflation. Will the current stimulus packages lead to another financial crisis similar to the subprime crisis as we suffer now? Thank you.
Of banks and will we get to another crisis? Maybe the Minister and Caio again?
Well, about the banks, because as a politician, I can talk as a politician to the gentleman of Germany. That's one of the biggest issues, you know. I mean, there's a lot of frustration amongst companies, big and small, how to get out of the credit crunch, okay? And there are 2 ways to solve it. probably first way to solve is as we are owners now today, happy owners, the states of banks. We have a new job to do. You could intervene in the microfinance of banks, but that's not the way to do it. I mean, there's no way to say to banks, this you should at least have a percentage back into credits. I think the only way to solve it, the second way, is to get back to healthy banks. How can you get back to healthy banks? And there I'm a little bit disappointed by what Europe has done. There has not been really a European solution to the whole financial problem. If you look at the United States, they've done stress tests, recapitalizing banks, a global solution for the banking problem. In Europe, it's state to state, you know, Belgium to Germany, Germany to France, and there's a lack of willingness to have financial supervision, to get rid of the bad assets of the banks in a global way, in a European way. And of course, I mean, if we do not find a European solution to that, it will be a very tough time we're going through. Today, a lot of states are owners of the bank, like I've said, and we're getting signals of banks asking now for the governments to get out of the banks. I think it would be a bad idea to do it now, because as long as we haven't found a good solution to it, I think we could get in trouble quicker than we think. But that is, I think, what the credit crunch could be solved at. And once that is solved, we could get back to normal economic times. Although I think that what Europe should be afraid of is what I would call a Japanese scenario, where growth would not get back to 2 or 3%, where growth would stay at 1% at least, and what we need is, and I come back to that, is the structural reforms. But you know, it's not as popular to do so in countries like Germany or Belgium. I mean, if you ask people to work until 65, otherwise their pension will go down, I mean, the next thing you do is lose elections. You'll have elections at the end of the month in Germany. Same goes for other countries. But if you look at, for example, the employment rate in European countries, 60, 65%, we should have at least 70% if you want to go back to normal economic times. And unless we find solutions to that, it will be very tough to go back to 2 or 3% normal economic growth.
Caio?
Well, first on the question of the financial system, as Scholler asked, let me say that I'm happy to say that I'm reporting from the vantage point of one of the few global financial players has not taken any state money, and we've done well. I think it's important to emphasize that because obviously there are many constraints on others. Let's face it, I mean, a huge deleveraging effort is underway in the global financial system, put it very simply, and I don't have time to go into all the reasons. And at least in my book, I see a financial sector in the future, broadly speaking, that is smaller as percent of GDP, that is somewhat more regulated, I hope wisely regulated, not Sarbanes-Oxley overreaction, that is lower profit and hopefully also lower risk. And that process takes time to work its way through the different systems and segments of that market. I think what the G20 has done last week, what the Basel Committee, the BIS, discussed is good progress. I think under the able leadership of Mario Draghi, the Financial Stability Board is coming out with roughly the right package before end of year. It will certainly increase, Tim Geithner's article in the FT last week, in many dimensions, capital requirements, and it certainly will also address the leverage issue. So again, it will impact on profitability and lead to a further restructuring. And most of that is good, although of course the devil lies in the detail. To your question on credit crunch, take Germany. There is, as far as we are concerned, no credit crunch per se. There is obviously a much tougher look now at credit worthiness of borrowers. We have to. I mean, look at what the crisis has done to many of them, and there are lagged effects. And of course, I'm worried that particularly all those banks who have very large loan portfolios, including in Europe, some Spanish banks, others, the NPL ratios will go up with the lagged effect. So I think that's roughly the situation. If I may just add on another financial crisis, the question. Well, crises come in different shapes and and forums. I really worry about the inflation aspect medium term. I was never that concerned as some others about deflation, but it's an exceedingly difficult path to walk for central bankers and others now to address the three objectives: to keep the financial system stable, to make sure there is short-term demand and recovery, but also to avoid inflation in the future. And again, it comes back to this output gap question that I raised before. The temptation ultimately might otherwise be of politicians to inflate some of these debt and fiscal problems away. And of course, nobody wants that. If I could add to what the minister said on the European Union, I think the ECB can take credit of having handled the crisis quite well. You're right to say that many actions, particularly on financial regulation, lack a pan-European approach. But the ECB, I think, has probably the best performance of central banks overall during the crisis in total. We at Deutsche Bank argue very strongly for a single European banking supervisor. The College of Supervisors is on their way, but we all know why. Finance ministers, when they are the providers of last resort, like to keep control. There is a bit of a mismatch here in the political system. And what worries me also in Europe is, of course, now the divergence in competitiveness and growth. Just take Spain and Italy on one hand, and the Nordic countries, Germany, France, on the other hand. I mean, it's less easy than in the past to have a common monetary and fiscal policy that fits them all.
Ying, there was a particular question about China and whether you feel there's going to need to be a macro adjustment. Would you like to respond to that?
Yeah, I'd like to address the inflation issue about some Chinese very, very important issue. So I see many Chinese audience here, so I like to use Mandarin also to prove I'm a Chinese. So.
Yesterday, Premier Wen Jiabao in public recognized that there is a threat of inflation in China in public, and he mentioned that we should guard against it. I am not an economist by myself. I think there is a risk of inflation in China because we have so much investment and such a loose credit market. However, as we see now, this is not really the most critical issue. The 4 trillion stimulus package plus the investment from the local governments or other communities, the people who benefit from it most are the SOEs, while the private enterprises do not benefit it a lot. I'm helping a small private entrepreneur recently. He couldn't get loans even if he mortgaged his own house. I think that we still have some other serious problems, even more than inflation. Now, I think that about 30 million or so are still faced with the problem of unemployment. The stimulus package does not help with the solving of the unemployment issue a lot. The private companies still have a strong willingness to invest. However, now they are not very willing to invest or to expand their businesses. A lot of private entrepreneurs are quite worried about the current situation. I think that both the SOEs and the private enterprises should develop simultaneously. Particularly, we should rely on the market. I also noticed that the Chinese government is talking with the EU. We hope that the EU could recognize China as a market-based economy. Of course, EU and also US have to look at a lot of statistics to give the recognition of China as a market-based economy. I suggest the Chinese government should improve further the political and social status and economic status of the private businesses. And it should also give more market access to the private enterprises, because now private businesses still face a lot of constraints, and foreign enterprises also face a lot of constraints. Otherwise, I think if the private businesses lose their interest in further investment or foreign investment lose their instrument, it will have a negative impact on the national economy. Now we see some 20 or so measures launched by the state, but we still call for more detailed measures to encourage the participation of more private businesses and foreign businesses. I think that this forum is a good platform for us to discuss these issues. Thank you.
Thank you very much. Let's open up for another round from the floor. The two people over there. Sorry, where's the mic?
My name is Mark Zawadzki. I work for the Russian Business Magazine Expert as China correspondent. I'd like to ask about another implication of recalibrating of global demand about consumption. So my question is, can we say that the new consumer will be almost the same as an old one? So we're going to see just a mere replacement of an American consumer by a Chinese consumer, or we'll see a completely different pattern of consumption that we have to take into account, while making all the business decisions. Okay, thank you very much.
Thank you. Yeah.
Gao Ming from China Daily. Well, in view of the weakening dollar, I'd like to hear your comments on the status of gold in the world financial system, because there has been a hot debate in China as to whether the central bank should increase its reserve of gold. And there's even been a school of thought in China now as to the devaluation of the dollar and the appreciation of the RMB is a treason on the part of the Westerners. So could you give me some comments on that?
Right, we'll see who's brave enough to comment on that. There were some hands, person in the middle, and then we'll move over to the right. Yeah, in the middle there.
I'm Praful Kulkarni with GKK Works. The question is, there seems to be a consensus emerging that deficit financing is going to be a major issue. I would be very interested in finding out what is the ideal solution so that we do not go into a chaotic situation like the 70s.
Thank you. The person that, yep.
Dalian local newspaper, Peninsular Morning. My question is for Mr. David Dollar. It's said just now, most Chinese prefer high saving, while most Americans would like to spend all. Do you think we should learn from each other, and who will learn more from the other? Would you be kind enough to tell us your opinion about these quite different consumption habits? Thank you, that's all.
Good. So any other questions that want to come in? This might be the last round. No? Good. Well, we have a very broad set of questions, and perhaps we could take the phone off. Begin with this interesting question about whether consumption growth will be of a different nature coming from Asia than from OECD countries. A very interesting question, and how that may affect markets, commodities or others in that case. Who'd like to take a first stab at that? Ilian, we haven't heard from you for a few minutes.
Sure. So there were many interesting questions, but let me start first with this one. Before we think about the new consumer, let's go to something very basic. Let's remind ourselves what drives, at the end of the day, income per capita, and what drives demand. Sometimes, people are over-focused on saying, oh, the consumers are gone and, they will not reappear again. But let's remember that in the long run, what makes people richer and what makes them consume more is actually productivity. It's actually the supply side. The reason I'm saying this is because we have to recognize that with the current crisis, the ability of the American economy, of the American firms, households to come up with new ideas to become more efficient has not disappeared. Consumption has gone down and demand has gone down because of the temporary deviation from potential, from the trend, but it is not what drives long-term success of any country, and the same is true for China. So when we talk about the new consumers, well, you know, the Americans and the West Europeans are not going to disappear. I think that what will happen is that we'll see rebalancing because of the high growth that we observe in China and in India, where these consumers will be different, where the consumption baskets will be different, probably to a certain degree, but I think that by and large, consumption around the world in countries that are growing and are at certain levels of development are about the same. So I doubt that that will be the issue. Can I talk about the future crisis, where there will be another crisis? Do we have a couple of minutes? Obviously, there are a lot of concerns about the exit strategy, where we'll see inflation. Right now, when you look at the markets, obviously markets do not think that there will be inflation, because the yield curve and all these things do not say whether there will be inflation, that they expect any inflation. But I think that it is useful to recognize two very important things. The first one is that monetary policy has an exit strategy. This exit strategy has been used by Japan before, between 2006, well, actually in 6 months in 2006, reducing money supply by 40 trillion yen. So this is something that is doable. On the balance sheet of the Fed, there are $600 billion worth of Treasury bonds that they can sell, and therefore reduce the liquidity in the system. Where they'll be willing to do this, it's a different question, but it is possible, and to the extent that the Fed still believes in inflation targeting, I think that will be done. On the fiscal side, I think it is very important to make also one more point in addition to what David Dollar was saying. If the United States decided to be conservative during the recession, the fiscal deficit would have grown most likely much bigger than the current estimates of the CBO. And one example of this is Japan. A lot of researchers that look at Japan and the skyrocketing deficit and debt in Japan point out to the fact that the slow response to the crisis generated low tax revenues, and therefore large deficits, and pile up the debt. So fast response during a crisis is important. How do we get out of this? Well, it's very useful for all of us to remember that in good times, we should be asking governments to be prudent. And we haven't been doing this in the last 10 years in most countries.
Thank you very much. I'd be interested in the comments of Mr. von Quickenborne and Koch-Weser on these two questions of will the nature of consumption be different to that we know going forward, and also do we need to worry about a return to the 70s, which was another question posed.
All about consumption, I think, of course, there's a shift to the east. I mean, if you look at companies, European companies, coming back to profits, those who have invested in China and Asia have done so well, and thanks to, of course, consumption levels going up in China. But I do think there will be a new consumer, yes. And I think that the governments have a big responsibility. Of course, there's the environment issue. I mean, looking at where growth will come from, less from the financial sector, like the colleague from Germany said. But there is a big issue in Europe at the moment, looking at fiscal deficits, that the tax burden will go up again. I mean, if you go to budget discussions now in Europe, they say, okay, half we will cut in government expenditure and half will go to new taxes. And this, I think, is a bad idea. The only way to get out of it, I think, is to change the way consumption is done in Europe. And for example, those people choosing for the right cars and the right houses should profit for more tax deductions. Those getting for the big cars and the bad houses, I mean, maybe we should give them less tax deductions so that we could change the way people are consuming in terms of the environment. Food, same issue. If you look at meat consumption in Europe, especially in the States, and all the healthcare issues connected to that, probably we'll have to change the consumption patterns of those people also. So yes, I think that we should learn from this crisis, and if you talk about other growth, more quality growth, there is a government responsibility to that. So I do believe we have an opportunity to that, but the question is, are governments now ready to install the right instruments, or are we getting back to the old methods, that's to say, raise the tax burden, raise government expenditure, and in the end, have nothing learned from all of this?
Caio?
Well, if the US consumer will not be, and it will not be, the consumer of last resort, of course, middle classes, particularly in the emerging markets, will partly take place. But I think we should also reflect much more, not just on the magnitude, but also the composition of consumption in future. I don't think it's worth repeating the American culture of savings and consumption. By far too little savings. I used to say when I addressed audiences in the US from the government, German government side, it's as difficult to get Germans to consume as Americans to save. And I think the Chinese are more like some of the Europeans in that regard. So there has to be a healthy balance in that sort. However, David, you're absolutely right. If the US is not importing consumer of last resort and wants to export more, the other flip side of the coin has to be we have to find ways in Japan, Korea, China, and Germany on how to stimulate domestic consumption demand. Not easy in a mature economy like Germany. I think easier medium term in China. And finally, on consumption, composition of consumption, I think we have not even begun to address sufficiently what environmental concerns, resource limitations, climate change mean for the quality of consumption, quality of life in a very, very fundamental way. In the US, for example, that more is not necessarily better, that it's quality, not quantity of consumption. In Europe, energy efficiency. I mean, the whole gamut, it's a different discussion, but I think can lead to growth, but also a very different consumer of the future. And in the end, it relates also to educating consumers at an early age. If I may just say on the reserves and gold question, obviously gradual internationalization of the renminbi is in everybody's interest, also in the context of this discussion. I listened carefully what the Premier had to say last night. I think wisely to enhance the use of SDRs and substitution accounts in the IMF so it's doesn't raise other problems is a wise way to proceed. And I think eventually it is in the US interest not to be the lead currency. In fact, there are many arguments now why when you have a world where the renminbi will reflect the superpower strength, where Europe has the euro now, that history will lead to a different phase where you have several of these currencies. Different discussion, but I think it's a plus-sum game for everybody in the end. And finally, Ian, we didn't discuss governance, but I think again to Chinese audience to use the G20 now, which fortunately has replaced the G7. I was involved in creating the G20. I think it is the right forum now for dealing with what we didn't discuss, how you orchestrate, how you have enhanced surveillance, which the IMF tried some years ago but was not successful in, creates huge issues for better governance of the international monetary and financial system. And again, my plea to China would be, you are now big. The spillover effects of what you do are so enormous in the world that responsible leadership, and not to hesitate to assume leadership, in these international fora is in everybody's interest.
Very important message. We're running out of time, I'm afraid. Just very briefly, 1 minute for David and for Wu Ying. David, a specific question was asked to you on how do we learn from each other and try and go past each other. And if you want to be brave enough to take on the dollar question,
well,
please do.
I think in 1 minute I can link the two questions from the press. There was a specific question about buying gold. It's impossible to predict what's going to happen to the price of gold. I think the more general issue is China has a huge amount of reserves, and it makes some sense to diversify what you put those reserves in. And I agree with Caio Koch-Weser's point that it's healthy to have a variety of different reserve type currencies, and we certainly welcome the internationalization of the renminbi. So I think China there's an issue about what you do with that vast amount of reserves. To me, it raises the question of whether do you really want to go on accumulating reserves at such a rate? Is this really in China's interest? And then I would link it to the specific question from the Dalian journalist that I think it's excellent to think about the U.S. and China learning from each other. I admire the savings, the sort of savings culture of Chinese households, and I certainly wouldn't want to see that completely change. I think Americans could learn from the savings culture of Chinese households, and we hope American households will save more. On the other hand, China's reached a stage of development where people, I think, can consume more and have a better quality of life. And one thing I would encourage you to learn from the United States is among large economies, we feel that we're the most open in terms of trade and foreign investment, and we think that helps create a good quality of life, and that can facilitate an appropriate level of consumption. So if China buys more from the United States and from other economies around the world, it's not going to have such a large trade surplus, it's not going to pile up reserves, it's not going to have all the headache of how do you invest such a vast amount of money and get a good return. So I would encourage both countries to learn from each other.
Finally, Wu Ying, your views on currency and on what you can learn from the US and what they need to learn from you.
Well, that's a very interesting question. She asked this question about the saving habit. I personally think in short term, US consumers saving more is actually it's a challenge for United States, because US GDP like 70% from consumer expense. But long term, I think it's very good for the US. But on the other hand, Chinese savings, I personally agree with the some Chinese officials' observations. Saving rate is too high. It should consume more and enjoy life. Not actually, if you do the statistics, the savings, that's actually the money people put in the bank. There are many people actually still putting the money under the pillow of their bed. So if you put that into the calculation, that's quite a big purchasing power, which I do believe should be balanced.
Thank you very much. Just some concluding thoughts. I think what the panel has highlighted with its very clear insights is the need for great leadership from governments. There's going to have to be enormous transformation in Europe and in the US, structural reforms in pension systems, longer lives, changing dynamics of fiscal is going to need very brave politicians to take bold steps. The same is true in Asia and not least in China, where enormous changes have taken place and will take place. And all of this, because of globalization, needs to be linked. The systemic risks and the integration of these systems have been highlighted by the financial crisis. The global imbalances have grown, not reduced, so there's much more work to get to a more stable global world. And so China's role and the role of other leading powers in resolving this is key. I think we've had great insights from the panel. I want to thank them and thank you for your tremendous contributions.